until next time, this is Michael Rosehart, and any last minute tips?
Sell.
Sell. Thanks, guys. Just in summary, the TLDR is, you heard it here first, Michael Rosehart said real estate's terrible.
So I did a...
I might just get some more water first. But so like I figured we'll just literally talk about, I'll maybe talk at first about my experience, how like I constantly feel like a yo-yo going back and forth between, you know, I'm going to be Grant Cardone, I'm going to sell everything, I'm going to be Grant Cardone, I'm going to sell everything. And then you can kind of discuss.
It's interesting that guys like Mr. Right Mustache sold off their rental properties.
Well, yeah, and that's a great thing to bring up too, right?
It's not a good fit for everyone, right?
Yeah. Welcome to another episode of Mike and Matt on Fire. And so in this episode, we're actually going to talk about something that I think is really interesting. So if you guys have watched the previous video with Michael, we discussed how kind of Michael built up his real estate portfolio, how he became a millionaire at age 24. But the thing is, he did that all through real estate, and yet now you're actually in the process of selling all your real estate, or at least the vast majority of your portfolio. So at the peak, you hit 15 properties.
Yes.
And by the time you're fully divesting, where do you think you're going to land with the number of properties?
I think 4 or 5.
4 or 5, yeah.
Is the ideal target. No more than 5 for sure, because that's beyond what I can manage, and I don't want to have employees and things like that.
Yeah.
You know, I talked about that. The effort involved with managing and creating those systems is substantial in the beginning, and definitely turnover, right? So if you have a good employee, I spent a lot of time training one employee. You know, and then what if you have that employee and you lose that employee?
They leave, yeah.
Then you have to start from ground one again. So, or ground zero as they call it, I guess. So that was the big downside for me, was that, you know, I'd ask myself the question, do I want to be running a business in real estate? Or is it just a side investment for me?
Yeah, and so like I think this is really interesting, because a lot of the people that consume my content, a lot of people who are familiar with my content, know that real estate is both the way that I and a lot of people on my social network have built up our wealth. It's the way you build your wealth as well. But there does seem to become this inflection point once you reach financial independence, once you're financially free, where you start really then, you're like, okay, I got this money problem covered now, and now it's all about trying to be as free as possible with your time. Yes. And so you're constantly doing this balancing act. And so I know for myself, like, I'm a pendulum swinging from extremes to extremes. You guys have got like a little taste of this on my YouTube channel, but my friends know a lot better, where it's like, hey Matt, how's it going? I'm selling all my real estate. Hey Matt, how's it going? I'm gonna be the next Grant Cardone. And like, it's that back and forth, and it's actually really difficult to figure out what to do next. And like, the reason I know that I'm that pendulum swinging back and forth is it can be the highs of like executing on that real estate deal, getting the perfect deal, getting the appraisal above what you even had dreamed of, and all that is so fun. But then there's the text messages, and like the moment you just cringe because your phone got a text message.
Yes.
And so like, I'm a seesaw back and forth. But what's really interesting is for the last year you've been financially independent, and we've talked a bunch about this, and we go back and forth like almost on a weekly basis about like, are you going to sell everything? I don't know, are you? And you're actually selling essentially everything now. So let's just kind of walk us through a little bit. I guess maybe paint a bit of a picture of what your portfolio was like, kind of what the average tenant was like, and the amount of daily management that each unit kind of required from you. And then we'll maybe dive into the logic of how you actually came to this conclusion.
Yeah, okay. I started with my first real estate property as a house hack that I bought to live in, right? So that was my introduction to real estate when I was 19. And I rehabbed, the basement was a disaster, so I renovated it, added a bathroom to the second floor as well. I lived in the master, rented out some bedrooms, so I got a taste of having boarders or roommates. And then I rented out the basement as a separate unit, though it wasn't entirely, you know, I wasn't a legal duplex.
More like a granny suite.
Yeah, more of a granny suite. And so we shared some of the common spaces and that sort of thing. But it was very great that I was able to get through, like when I was going through university, I was making $200 a month. Not only to cover all my housing costs, but I was making money.
Getting paid to live is the best thing ever. And I talk about it all the time on my YouTube channel when we're talking about house hacking or rent hacking. And like, just 30 to 40% of the average person's budget is going towards shelter. The moment you cut that out,
like where's all that capital going?
Right?
Savings and investing.
So all of a sudden you're saving almost 50% from day one by doing that house hacking. But yeah, keep going.
Okay,
sorry.
So yeah, that was where I started in real estate, and that was sort of my first property, right? And that gave me a taste, right? A taste of how sweet it could be, and how your returns can be very So full disclosure, at that time, I had some great scholarships in school. I had great jobs. I started university with a considerable amount of savings from working a full-time job at Tim Hortons while I was in high school. So that was kind of cool that I started with a bunch of money. And then my parents contributed to 1/4 of my education. So I didn't do it all myself, but I could have. Like I graduated with enough positive net worth that you can get through school debt-free. That's like a buzzword, right?
Yeah,
You're like, wow,
you definitely can.
Debt-free, that's awesome.
It's really just about planning, right? Like no one gets through school debt-free by accident.
No.
It's always going to be a well-executed plan that gets them there.
Yeah.
But like the crazy thing is now with the internet, with YouTube, with social media, like it would have never even been on my radar, the idea of being able to buy and house hack while going to university.
And it wasn't then for me either.
But now that like we have these resources, like I'd almost argue there's no excuse people shouldn't be hitting financial independence even earlier these days because it's so easily available.
I'm not going to be Canada's youngest
soon,
youngest self-made early retiree.
There's going to be someone chasing you,
Someone's going to beat me, right? So that guaranteed, and it's not a competition, so who cares? But I think at the time I was the only one doing this that was getting through debt free, didn't have like wealthy parents that were paying for tuition or whatever. And like people who knew me in university will attest that like I was a hard working mother. Like I was going hard. I always had like I compacted my school from Tuesday to Thursday, and I worked Friday, Saturday, Sunday, Monday.
I did the same thing, like except for I was lazy.
So like exactly, you have the same work ethic, and clearly that's why you're able to reach financial independence, because we're cut from the same cloth in that respect. Very much overachievers and that sort of thing. But at that time, I had enough capital that in between paying tuition, I would invest that, and I was getting a finance degree, so I'd taken a lot of courses on fundamentals of value investing and sort of valuation of stocks and companies. And so I had an accounting background as well, and I could dig into financial statements, and I felt like as an investor, I always wanted to have an edge, and that's my big thing, is I'm not going to invest in anything I don't have an edge in. And so where is the place I can get the biggest edge? And I thought, because I was getting a finance degree and it was fresh in my mind, I was studying with some of the smartest folks from like the Ben Graham, so I think it's Ben Graham?
Yep, Ben Graham.
Value Investing Society, and some of my profs were some of the smartest guys I'd ever seen making a killing. And so I was trading, right? And then I would compare at the end of the year, let's say I made like $10,000 trading. And I was like, you know what? I made like $20,000 from my real estate property. And my ROI at the end of the day is better in real estate because of leverage.
And like we've talked about this on the channel before, but leverage is the reason, like if you weren't able to leverage real estate, we'd be singing a completely different tune towards real estate. It's leverage, and
leverage it cheaply. Like cheap debt is important.
It's the cost of the financing these days in this environment that draws us towards real estate.
Definitely.
So you slowly built up this real estate empire, and now you're tearing it down.
So I basically the 15 properties, I shifted from, originally my plan was to retire at 29. I could do that without any real estate at all. So for those who are following and they know about the previous video talking about financial independence, you can do it without real estate. If you don't want to invest in any real estate, you don't want the headaches, you can just save and invest your way there. I still would have done it without real estate. I just did it faster with real estate. And so I built up real estate as, in the beginning, I didn't know anyone in London that was like even had any properties. None of my friends really did. And then so I bought my second property, and I wasn't the wisest, right? I made a lot of mistakes along the way. I could have negotiated a better purchase price. I could have, put better tenants in. I could have renovated smarter, hired better people, got cheaper on, the renovation costs. All of these things that I didn't know, right? And so it was sort of a learning curve for me. I think I reached optimal, like, where knowledge met wealth. In like late 2016, I think is when I started, like mid to late 2016 is when I really was at my peak. And so I figured, why don't I try and capitalize on this and really ramp things up and just go full Monty. And so I sold a lot of in like 2016, I had a lot of, that time I had 4 properties, I think. So then I cashed out my TFSA, tax-free savings account, cashed out all my investments there, because I was actively trading before that. So I would say like maybe 70% of my net worth growth was from real estate, 30% was from stocks and trading equities and stuff. But real estate was still the primary driver for sure. And like, I'll discount that with the fact that saving was the primary driver. I saved nearly like $250,000 in capital to get started in real estate over the time, right?
Over the
just
period.
Pure from my day job, right? And then I reinvested all the real estate capital as well. That's technically savings too. So real estate for me was all about reaching financial independence. And that's why I kind of took this little time to do the preamble. that the goal at the start of this was financial independence. It was to not have a job. It was to be free to travel the world, spend time with my family. I want to raise my daughter. I wanted to be there to hang out with friends on an afternoon like today. We're just hanging out. I've never done that kind of thing before. And so that's what it was about, was that freedom lifestyle. And I wanted to purchase freedom more than I wanted to purchase a car, more than I wanted a nice house, more than I wanted a vacation. And I made that a priority.
And I think like phrasing it that way, like looking at it as buying your freedom's important, right? Like your freedom's for sale. It's just a matter, are you willing to pay for it?
That's right. And we all have the choice to pay for that. And so that's something that for me was always top of mind. And real estate, again, was a way to make money to do that. I've never since day one really on average enjoyed interacting with tenants. It's never been something I really liked. Renovating was never something I really liked. I got good at it because I spent so many hours renovating. So I became an expert in that. I could frame and insulate and drywall and lay floors and all of that kind of stuff. But it wasn't something I enjoyed. I did it because I made a lot of money doing it. And that it was out of necessity. It felt like I think I needed my freedom.
And like, just as an aside, I think that there's a great life lesson there. Like, you just learned the new skill set, right? Like being open to experiencing things, becoming a Renaissance man is fantastic as well.
Bingo, is where I was pointing at.
And so it's discussed a lot in early retirement extreme, but the idea of, you know, are you going to become so focused on your niche where like you're essentially just really good at one thing, or are you capable of solving almost like 80% of your life problems just by like 20% effort, that sort of
that's the big thing, right? And is it always worth it? Sometimes you have to outsource something.
Absolutely.
Like it got to a point where someone else could lay floor faster than I could, and it was worth it for them to do it, right? So,
or your marginal return is just so much higher by doing something else.
Exactly. So it's allocating your time in an effective way. But in the beginning, like I was young, I had a lot of energy, I had great health. So I was willing to put a lot of energy, a lot of time, on my hands. I could give 100 hours a week to this goal, this pursuit. And so that was what I could sell. And then now I've built up to where my wealth can generate a lot of that for me. But let's talk about the decision, because I'm getting there. And I think some of this is important to...
the preamble is important.
To the decision, right? In 2016, I decided to ramp things up. 2017, I really ramped things up. This is like a buzz thing. But the other day I was talking with someone on Facebook Messenger, and it occurred to me. They said, well, how long have you had your properties? Like, walk me through property by property. And I did. I laid out a whole thing of all the properties that I acquired. And I realized September 2016 to June 2017, I acquired 10 properties. In 10 months.
10 months.
10 properties in 10 months. You can see the exponential curve of how long I was going to get my second property was 3 years, right? And so, you know, expertise met wealth, met all these things, right?
And so I think, like, again, not to derail you, but there's a huge lesson there about like kind of the snowball effect, right? So a lot of people in personal finances are familiar with the snowball effect as far as it regards paying down debt. But what happens is once we start creating these passive income streams, once those trickles start coming in, if you're not using those trickles for your day-to-day living expenses, it just builds up this huge war chest, and then you start executing. And if you execute well, it gets you another little trickle, right? And you just keep with all these different streams.
I think at peak, and I'm curious. I wonder if you would share this with the audience. Like, what kind of rent do you collect on a total on your portfolio? Like, what's the
gross rents?
Just gross.
We've talked about it before, but like it's something that sounds absurd, but then you have to remember that partners and all that. But like, it's over. It technically would be like over 50 grand now a month.
That's insane, right? 50 grand a month. And I don't have as many. I own most of my properties myself, so I just started
there's a difference.
In 2017, so my number's gonna be a lot lower. But I was near around 30,000. And
and if you take mine in half.
For
partners.
Sort of the same kind of ballpark. And that for me was really empowering when I got to that stage, because it's like a down payment on a property is pretty close to that in a month. And let's say you could use another source of income to float your whole business.
Otherwise,
You could take the rent for a month and delay and use that rent to down payment on the property, right? And so I used that momentum to really, like, I could have kept going probably. Using this momentum, I could have probably got to 100 properties.
Absolutely,
in you know, relatively short time. And that's where I was at in my previous video. We were talking about in that previous video we were talking about the trip and the downtime, and I was reflecting on what my purpose was at the center of that octagon of the 8 dimensions, right? And what would make me happy, right? And I don't think that building a $100 million business was going to make me any happier. And I think that the sacrifices I had to make to build that business, right? I would have to dedicate 60, 80 hours a week if I wanted to really go to that target. And I would miss, you know, my daughter growing up. If we have another child, I miss that, right? Over that 5 or 10 year period. And so it didn't fit with my goals. You have to ask yourself, I think, especially when you're planning what's ideal for your purpose and where you belong. when you're deciding if you're going to sell or not, you can even, I know you're still on the fence all the time.
Yeah.
You have to ask yourself, if money wasn't a question. Like, and
Would
it
you
isn't
still do
actually
it?
a question for us.
No, and that's the best way to phrase it. And I think that that's where a lot of early retirees don't rethink of it, right? Because like it's also kind of hard to let go of that. I don't know what you want to call it, that baby, that child, that whatever that's your real estate portfolio, because it's the reason you succeeded, right? Like it's your first love.
So's your job,
right? Yeah, arguably, I don't think I consider that my first love. The first paycheck was good though, but yeah. But like it's one of those things that again, we've discussed it on my channel about the dark side of financial independence in regards to your ego and your personal identity.
Yeah.
So like what was kind of easy for us quitting our jobs is then you become the real estate dude. So like you still have an identity that a lot of people understand. So I think what's going to be interesting too, and we'll maybe get to it later in this video, is how are you going to reinvent your identity, because you're going to stop being the real estate dude. So, but keep going.
You've got this a lot, and I like that point that you've made. And previously we've had conversations where you're talking about, you know, your identity is, oh hey, he's the guy who has 15 properties or whatever. He's the guy, the real estate guy in London. And I don't think, you know, I think that's the wrong question. Those are the wrong questions to ask. And you've said that before in the past, that, you know, you aren't your properties. You aren't.
But it's so hard to not self-identify as that, because like you essentially are the sum of your actions. And if a lot of your actions involve real estate, you are the real estate dude, right? Or you're the CPA, or you're the computer guy, or whatever your niche or your life revolves around. But
I'm gonna miss, I think, being that real estate guy. Like people knew me. A lot of my friends knew me as having a lot of a lot of properties.
Well, and the weird thing is, talking about real estate in particular, like it's different than like there's something weird where you can essentially humble brag about real estate and it's okay, but like you're not allowed to humble brag about your portfolio, like your TFSA portfolio the same way, like in social circles, right? Like for some reason, like people don't, you know, if you start talking about having a 7-figure like investment portfolio of just stocks, for whatever reason, I think a lot of people perceive that as you being a douche. Where if you're talking about owning 15 properties, you're just a dude that has a bunch of real estate. And like, it's a weird, do you know what I mean? Like
a little bit, like I think for me,
like it's way easy. I bet way more people know how much real estate you own than like what you would have in your stock portfolio.
True. It depends on the circle you're in. I think sometimes I talked about my real estate portfolio, and I have friends who think real estate's a lot of work.
Yeah.
It's like being a slumlord, right? Basically.
Yeah, for sure.
Like how do you be a good landlord with so many properties, right? You must be a slumlord. And so there's a lot of that going on, and like shedding the slumlord thing is really great, because
it's frustrating to come across that preconceived notion.
Give you that
absolutely.
Notion. Yeah, exactly. And they project that on you. But I think as an investor, I've always liked the persona of, and like when I started on this journey, right, I had this dream of being this guy who had a family, whatever, and was involved in the community and whatnot, and helping other people. But I was known as the guy who just lived off his investments. Like he was a trader or whatever. And that feels really like that's the core of who I am with my finance degree at Ivy. That was the whole goal. And so for me to switch into that identity, we're kind of talking what persona would I switch into. It might be that I like get a CFP or something, or it might be I become an advisor of sorts. And it wouldn't really be about the money, but it'd be about meeting with people and enjoying helping others grow. And I need to lead by example. And a lot of people in my network anyway don't want to build a 15 portfolio, real estate portfolio, property portfolio. And so, you know, saying I can live off my investments is something that's attractive to those folks. So I think I can lead by example in that way. That like, here's a truly passive income source. And I kind of want to get to, you know, there's several reasons why I decided to sell, and there are definitely cons for selling. Like you've talked about, you lose your identity. Let's be honest, you're gonna have less tax implications. You're gonna have less overall net cash flow if you're managing yourself. It depends how you structure it. You could have employees and run net the same. And like, I wonder, actually, we should talk about that at a high level. I don't have any numbers in front of me, but I did an analysis one night, and I was like, I bought properties at 20% down. So that was just the way that I structured some of my deals. And some of those properties, and I promise I'm going to give a detail of the kind of properties that I own, because I said I would do that. Some of these properties I've renovated them and I've refinanced them a while ago, but the market's heated up since, and I spent more time renovating them, more money renovating them, rents have gone up, such that my net equity right now is like 35-40% in these properties, sometimes 45%. And by like there's nothing I can really have done about that. I'm locked into these mortgage terms that cost a ton to refinance out of, and interest rates have gone up, so you have to factor in what at a higher interest rate, is it worth it, and all these sort of considerations to refinance. But I had a choice, basically refinance, pull the equity out, and buy more properties. Right, that's where I'm at. So go from 15 to 30.
Yeah.
And I would have the capital to do that, or sell everything and reallocate that capital in a way that would return a similar ROI. And because I have so little leverage working for me in some of my deals, my net ROI was like 8, 9%, 10%. Net. After if you hire a manager, I think on one property I costed out management, I costed out repair guy, costed out vacancy, capex, maintenance, allocations, all of those things, and the net was like 6, 7%, 5. I think one of them was 5.8%.
Yeah.
And I have to ask myself, like, and I think I assumed inflation, like, or price growth at inflation. So I use like 2.5% for appreciation.
Okay.
And because I don't have that much leverage working for me, right? Because I'm like 40% down at current market values. And there's another sideline I'll go on to is I think the real estate market is highly valued right now, so it's a decent time to sell. So I did that analysis and I came out on like 5.8% if I don't want to do a thing. If I don't want to be involved
completely hands off.
That's the decision I came to, is I don't want to like I'm a millionaire now. I don't want to have to deal with tenants calling me at midnight that's the faucet leaking or whatever, right? Or I couldn't pay rent because I got in a fight with Joe, and I'm like, I don't want to hear about that stuff, right? We got a property manager for that. And I don't want the property manager to call me and tell me about that. I don't want to hear it. I don't want to hear it from him. I don't want to hear it from the tenant. And so that was a lot of what was happening. And so for me, it was about a lifestyle choice. And from a lifestyle perspective, it didn't make sense. And then from a returns on investment perspective, in London, Ontario, some of my properties, it actually didn't make sense. Like I could go invest and make a better return elsewhere. And I was like, wow, this is surprising for me, because I didn't expect that. When I was doing everything myself, I was getting like 30% ROI on my capital, right? But then I'm starting to do mortgage. I get some mortgage pay down happening, right? Get some appreciation happening. Spending money renovating things when units turn over. And so the gap between the lever gap gets way down. And so people who like own their properties outright, just sell. Like that's an easy one. Don't refinance or sell. Make a decision. Don't keep it in cash, because their ROI is terrible.
Like unless you're sitting on such wealth that it literally doesn't matter, then fine. But if you're in the point where you're still trying to optimize, absolutely. The whole point is leverage in real estate. So if you're not using leverage to its full advantage in real estate, I have to question why you're using real estate as your investment vehicle in the first place.
And cheap debt is another thing too. I assume that interest rates are going to float back up to 5 or 6% on mortgages. And so eventually, right, it's a cycle, it's going to happen eventually. And I talked to some folks, I've talked to people from the 90s who had rental properties that didn't make any cash flow here in London. And those people cited high interest rates, cost of repairs, things like that. All those things accumulated where all they made was appreciation over the time that they owned the property, which still was decent. But we were actually flat like in London for like 6 years in the 90s when the Toronto market fell apart in like 89, 91. That whole period there from 91 to 95, there's no appreciation.
Depending on the neighborhood you pick, like you can still find houses in the old East Village or Soho that would have sold in the early to mid 90s for, let's say, $100,000, and 2 years ago you could have bought that house for $120,000. Recently we've started to see a gap grow there where now that house is maybe 160, but like up until very recently, there wasn't a huge appreciation driver. And so it depends on the assumptions you use, right? Everyone's going to have different calculations because every property is different. It's levered differently. I no longer had a full-time job, so I had to go to second-tier lenders to get a good refinance, and I have to pay breakout fees. So for me to actually make this happen, it wasn't as efficient as it could have been. Without the job, it's very I don't know how you are able to refinance. You must be your partners, and most people know that strategic partnerships is what I really focus on.
So that must be the way that you're able to get the refinance so quickly. But like you need to refinance in this kind of market like every year or two just to keep your leverage.
If you're trying to optimize 80%. To the most effective point. And
so that's if you're focused on your ROI. And that was, to me at the end of the day, I took the emotions out of it, right? Because I'm like, you know what, my identity will evolve and it will grow and I'll be fine. At the end of the day, if you discount all of my time and all of my stress and all of my effort, what am I getting? And it was between 5.8% and 12% on my best property. Net of all those things. So that's with leverage, that's with everything at my current stuff. And so I'm like 5.8% to 12%, I was averaging like 7-8%. Why don't I just buy a REIT? Take $1 million and put it in a REIT if I wanted to own real estate, right? And be that guy that owned portions of real estate. Or go with local people here and partner with them and let them do all the work, right? Potentially, right? You never know. Like, the guys like you are always looking for
and same with again, I have a video coming out in the future on my YouTube channel, but the idea that not everyone has to be a real estate investor, but almost everyone can make money in real estate.
Yes.
And so like whether that's hard money lending or
Yep.
buying a REIT or maybe specializing in a niche of the real estate business, where whether it's becoming a lawyer, paralegal, or a real estate agent, those sort of things. So yeah, no, I completely.
So that's some of the pieces, right? Was that the returns I was getting discounted for things like my time, and if I actually managed it myself and put my time at $50 an hour,
Yeah.
it was like a 2%. Like it was like terrible ROI. And you put it my time,
Yeah.
some of these trouble properties, trouble tenants, going to landlord tenant board, all those things. If I valued my time at what it's really worth, it was not a good use of my time.
Yeah.
And it was not a good investment. So for me, it just came down to, separating all of my past. Forget that I've made over $1 million in real estate. Forget that this portfolio is my identity.
Like, I think that's huge. Like, looking at this moment in time, forgetting the past, like,
What's the market value?
It's not a sunk cost, but like, ignore the sunk cost of the time and effort and energy you spent learning it, and look at it today, particularly once you've reached financial independence. If you've truly made it, you are at a great inflection point to really look at your life in a holistic manner and really figure out the dynamics of every aspect of it.
100% agree with that statement. It really is coming down to, personal fit, I think, at the end of the day,
Yeah.
too. There's a lot of that coming into it. For me, it's just I didn't want to have to run a business. It wasn't something I was interested in. I am still, like, in a lot of ways, an expert in real estate because of what I've been able to do. Not a lot of people can do 10 deals in 10 months, right?
Yeah.
And so I have that expertise, and I'm not going to say that I'm doing any coaching, but I don't know, in some capacity, I'm going to help mentor folks in the community because I don't want to lose what knowledge I have. I'm going to keep it fresh.
Yeah.
So I'm going to keep that knowledge fresh through the network, we hang out all the time, right?
Yeah.
Guys like us in the Bigger Pockets community here in London.
For sure.
We keep that fresh. So I'm going to keep the knowledge fresh. I'm still going to engage in the market. I'll probably keep 4 or 5. Like, for me, 4 or 5 properties covers all of my living expenses, net of all those costs.
So that's essentially one income stream you're looking at.
Yeah,
and
so
now
it's just
you're going
one
to
of many,
diversify.
right? And I'll take the $1 million, when I still have $1 million cash, that I'll then invest in other things. Like, I'm already doing hard money lending.
Yeah.
It's very easy to, like, some of my hard money lending is generating on my ROI better capital than I was getting on my rental properties.
Yeah.
So in those situations, like, especially with flippers who aren't looking for long term, they can pay high interest rates. At the end of the day, it was about maximizing personal lifestyle, which avoided the minimum, like you talked about earlier, I think in this video or the previous video, about, once you retire, in the beginning it's all about just getting that freedom, quitting that job.
Yeah.
And then it's about, it'd be nice if I didn't have to spend 30 hours a week doing this. It'd be nice if my phone didn't ring. It'd be nice if...
Yeah.
And so it's just always the evolution of the human brain and the body wanting...
Well, and our ability to adapt to our surroundings, right?
Yes.
Like, at the time, the idea of working 50 hours a week as a side hustle in real estate, answering your tenant questions, that wasn't a problem.
No.
But once you reframe it as,
to the
right?
problem.
Yes. Once you reframe it as, I'm financially independent now, I'm in control of my life, what areas do I not have complete control over? And that can be very frustrating. So a lot of us do want to pare that down. And so you kind of brought up an interesting example before we started the show about Mr. My Mustache. So again, he's someone that I'm sure lots of our viewers know, but he built up a substantial portion of his wealth through real estate.
Yeah.
And yet kind of divested himself from real estate, stopped doing the custom house building and stuff.
Yeah.
And really just
maybe I'll be like Mr.
on
My
more
Mustache.
balance. Yeah.
It's there are a lot of people in the FI community that when they reach that net worth target, right? And they realize they no longer need to worry about money ever.
Yeah.
If they just put it in a passive portfolio, it will generate more than they can ever spend, right?
Yeah.
And so you get to a point where, like, I think Mr. My Mustache might have realized this, and I can't speak for Pete because I don't know that's his name. I can't speak for Pete, but maybe the tenant calls were annoying to his freedom, to his lifestyle.
Yeah.
That's why he sold. I suspect that's the case. And so, owning rental properties doesn't have to be a part of your portfolio. You can go buy a REIT and get a similar type of return.
Absolutely.
Doing the same thing. You could also flip a house once a year and keep active, keep fresh,
I think
and make $100,000
that's
every
an
year.
interesting option as well. That's crossed my mind as well. And like, again, for myself, it would almost be more doing the flip as that's your stupid play money, right? Like, it's hard to be wasteful with money or inefficient with the money I have, but like, if I make a little bit over here and something I've never done before, then that's my play money. That's kind of what I treat my YouTube income or like Amazon stuff is, like, that's play money. So that's the reason I go out and buy new camera equipment and shit. It's not coming from my actual savings. It's coming from like a side hustle. So let's fast forward a year from now. How does your life look different than it did a year ago? And how does it look different from today because you've divested your real estate? Paint a picture for them.
Sure. Okay. So a year ago, I was heavy into investing in real estate, right?
Yeah,
And
like
I
you were
was-
working, like even once you quit your day job, you were working 50 plus hours a week, right?
Correct.
Still
yeah.
working on the
I
grind.
was working very, very hard, grinding with real estate. You know, dealing with tenant concerns, fixing properties, renting them
Yeah.
out, all of that sort of thing. And you know, there's like two components, right, that to my strategy. And part of it was the flip portion, and part of it's the hold portion.
Mm-hmm.
And the flip portion had astronomical returns on investment. Like I could double or triple my capital in such a short amount of time, right?
Yeah.
Such that I could refi and pull all of it out and
Mhm.
have nothing in the property. So it wasn't even, it was just created wealth. The hold section though, return on investment wasn't as good as it was, or actually it's more or less, if you outsourced everything, in line with a REIT.
Mhm.
Very similar. I just didn't have the same economies of scale that a REIT would have.
Yeah, but so
that's
like,
just slightly worse.
what did your day-to-day life look like then? What does it look like now? And what's it going to
Oh,
look
I see what
like
you're saying,
a
like a
year from
lifestyle
now?
perspective.
Yeah,
Okay, so grinding, long hours,
Yeah.
long days, every day, 7 days a week. I remember in the summer just being like, I'm praying so hard for a day where my phone doesn't ring and I don't get a text. It
Yeah.
just didn't happen until the first time it happened was in September.
yeah,
Or like I just didn't want to get any calls, didn't want to get any, and then I was just so frustrated with it that I think I was letting emotion sort of maybe cloud my judgment in a little bit.
Yeah.
And that's why I sat down and spent the time running the numbers, because I'm like, am I just emotionally like drained?
and I think
burnt
that's
out,
really
or-
important, right? Because like burnout can be different than lifestyle dissatisfaction.
Yes. So I was burnt out. The lifestyle as a real estate investor isn't that bad. It's better than, you know, a year before that when I was working full time, right?
Yeah,
Doing that and real estate was much worse than just doing real estate. So it was a dream to make the switch from full time
Yeah.
to being an entrepreneur. I think they're like, you know, if you look at the levels, right? It's like working for someone else in a crappy job you hate, working for someone else in a job you like,
yeah,
working in a job with autonomy, right? And whatever freedom.
Yep.
Working for yourself, right? Then it's like financial independence, right? So the levels of
Yeah.
freedom, I think that once you get to like I was like an entrepreneur in a lot of senses, that, you know, doing this was a venture where I was like almost self-employed in a lot of ways. Not really, but, you know, having properties and focusing on that is a lot of work. And the ultimate goal is financial independence, is not having to do any of that. And I think that's part of why even you have built the systems in place
yeah,
to have your portfolios run itself, you know, like
Yeah.
have your property portfolio kind of run itself and not call you. I know you
Yeah.
obviously are of a similar opinion, right?
yeah. So once you get down to 4 or 5 properties, what does life look like? Like, how's that different?
I go days without text now. And
Yeah.
I'm only down to 8.
Yeah.
So just dropping off some of the headache properties has been a huge benefit, a huge like boost to my overall like. So as I started to sell them, the amount of work I had to do decreased.
Yeah.
And that felt really good. I'm like, wow, I just like five hours
Yeah.
this week to work on my blog, or
True.
5 hours this week
Yeah.
to work on this, or hang out with friends. And so every time I sold one, it just was like reaffirming my thought process that like
Yeah.
selling is good. And then see all that cash come in. It's like, wow, to raise $1 million in cash, that's such
Yeah.
a cool goal. So for that, during like the now, and I'm still working on selling, by February I should have a lot more closed and a ton more in capital. And I still don't know what I'm going to do with all of that capital. I want to have a mastermind session or something where,
Yeah, no, I'm looking forward to it. I think it'll
where we
be fun.
figure out what does
Some options.
the ultimate portfolio look like.
Yeah.
Or like 3 different options, right? And so how do you allocate that capital to produce, say, an 8% safe return or something, or whatever. Having 4 or 5 properties in the future, like what is it going to look like a year from now? I can't say for sure, right? Because the future always changes. But I feel like...
But what's the goal? Like, what are you striving for?
Okay, so for me...
It's your phone almost never ringing.
Yes, my phone's almost never ringing.
It's you being able to travel for months at a time
Correct.
without issues.
I want to pick up and leave to, say, Costa Rica for 3 months.
Yeah.
Right? Costa Rica would be sweet to go down there. Her in-laws have... My wife's in-laws have a place in Florida. It's nothing much. It's a nice little 2-bedroom trailer.
Yeah.
But we'd like to go down to Orlando and do Disney. We want to go there every winter. Last year, so last December, before I quit my job, I spent a month in Florida. I had 4 months
did you?
vacation,
Okay,
yeah.
I didn't realize
So
that,
I remember I did a test run of financial independence before I pulled the plug, and I totally recommend that. Like, I saved up my vacation for like I didn't have a lot of vacation, but it took me a year and a half to save up those 4 weeks.
Oh, okay.
And so I used them all. To be in Florida, and my daughter was there, and I think she's not even 1 yet, so it was just she's crawling around, exploring, and we went to markets and saw a lot of cool wildlife. We went to Disney downtown, all that sort of stuff, and it was so great. I remember on New Year's doing a lot of goal setting, and I was like, this is the lifestyle I want. This is the goal. But to get to this lifestyle, I have to stay in real estate. I have to push my net worth up above the, like, I wasn't quite at the $1 million threshold, so I need to go further from the 4% safe withdrawal rate up into maybe a 2%, just to be really, really conservative.
Okay.
So that month for me was a time where I was like, you know, I had to make a decision. And so that's sort of where it started, was I was going to ramp it up. And then when I get to that point of freedom, I was going to stop, right, or ramp it down potentially. I didn't know. I just was leaving it to see how I enjoyed it. And if I built a business that I enjoyed, I would keep doing it.
Yeah.
But the future holds, you know, having those people in place. Like I still have all those contractors I can call if problems arise. I'm still never going to do the work myself, even though I have, you know, say 4 or 5 properties.
Yeah.
But I assume with everything rented and renovated that the amount of time is about 1 hour per week per property. So I'm expecting to spend 4 or 5 hours.
So 4-hour work week.
4 hour work week. Yeah. So this is like 4 hours.
Catchy.
Yeah.
You should name something that.
Yeah. It sounds like that guy, you know, Tim Ferriss. But yeah. So. Yeah, that's definitely the lifestyle that I'm looking for. And for me, it was about triple protection. I wanted the real estate to provide enough to cover my living expenses. I wanted the house hacking situation where I had the tiny house on Airbnb and the duplex situation to cover my living expenses entirely. And then I wanted the real estate or the hard money lending to cover a percentage. And then I wanted my portfolio to be a 4th layer of sort of protection. So like I have 4 times my living expenses coming in. How can I fuck that or screw that up? Sorry.
Yeah. No, you can swear. It doesn't
okay. So. And that was kind of in my mind, like I want to make sure that I'm super protected from and insulated from going back to work. Not that I couldn't do it, but I don't want to.
Yeah, it'd be tough though to go back, right? Like I feel like I'm a feral animal now. Like it'd be so hard for me to sit still for 8 hours a day.
I don't think I could hold my tongue.
To push TPS reports and all that stuff. Yeah.
I just don't think I could hold my tongue. Like. It was hard for a long time to hold my tongue and swallow the crap. Right?
I can remember doing so many inefficient things just because that's the way we always did it. Yeah. And it was better not to question.
Correct.
Yeah.
Exactly. So a lot of that and yeah, so what does a year from now look like? I think I'm going to be doing a lot of like helping other people, advising and coaching and that sort of thing.
Yeah.
I might be taking up in a full-time capacity training for that. So this year that's something you asked me about be doing. Doing a lot of that, probably helping people, reaching out and helping them meet their goals. So not necessarily with the goal of making a whole lot of money, and I don't even count that as an income stream. Like that'd be like a 5th income stream that if someone wanted to pay me for building a financial plan for them, cool. If someone made so much money and reached financial independence that they wanted to give a little bit back, cool.
Yeah.
That's awesome. And there's always like the blog and sort of other things that I'm doing. I'm not monetizing the blog at all right now. It's just a way of me giving back. There's not even ads on it. So I earn 0 from the blog at all. But it feels really good when I write an article and I got like 600 people to view it and people message me privately. Yeah. I like that. So for me, it's about, you know, the center of that octagon, those 8 dimensions. And real estate, it'll always be a part of who I am, of my story, of how I, you know, became a millionaire by 24. But it's not the core that defines me, right? Without real estate, I still have a lot of qualities that I think are valuable. And real estate will always be a part of what I'm doing, and I think I'm going to always work with, a lot of my friends have real estate, so I'll be always working with them in that respect. And if someone ever approached me with a joint venture in a similar, you once mentioned that you like to buy new properties only in joint ventures with friends right now, right? Yeah. And that's something similar to myself. If I had a good friend come to me and say, hey, I want to move to London and I want to buy a property, or hey, like I'd love to do a flip, I want to reach financial independence, I would show them, I would do it with them for fun. But I'd be doing it from a place of like, I'm not rushing. Like if it isn't done for the first,
stressing.
Next month we'll get it rented out.
Yeah,
you know what I mean?
Absolutely.
But at the same time, still following the set process, right? So
awesome. So I think just in summary, the TLDR is, you heard it here first, Michael Rosehart said real estate's terrible.
So I did you know that I did a daily video journal starting in the spring, and I documented my experience for a little over 6 months. Of my first 6 months of financial independence, and it was really stressful a lot of the time, and I just did it in my jammies at night. But if I ever compiled those videos, you could see what it's like as a real estate investor who's actively full-time in their business, and the money is fantastic. Like so much money you can't even spend it, but there's a lot of stress that goes along with that. And so I look back on some of those videos, and I would like to get them on YouTube at some point.
Man, I think it would be awesome to take all of them and just make one, like, cut them down to like the punchiest parts and have like a 30-minute or hour long like slice of life, like where it's just like the peaks, the valleys, all that stuff. Because it's like I've discussed it back when I used to do more vlog oriented YouTube videos. Like real estate is peaks and valleys. Like there's the highest highs are amazing. They're just truly like it just feels so good. You're on top of the world.
Comes back, 50 grand.
You're just like, I do see the matrix. I can weave through this, you know, like, and then when whether it's like a plumbing leak or just a tenant from hell, and like it can just like drag you down so much. So yeah, I completely understand where you're coming from with the idea of it's really just you're taking, you know, financial freedom, financial independence through real estate is a version of, you know, lifestyle design, and you're now just like you experience that level of lifestyle design, and now you're tweaking it, right?
That's
you're
right.
essentially just
optimizing.
Yeah, just the same way optimized inefficient real estate assets to get effective real estate assets that built our real estate wealth.
Correct.
Now you're just optimizing your life just for that extra little bit.
Yeah, and people should optimize their portfolios. There's a lot of people in the real estate, like even myself, if I had stayed the course, and even yourself, you stay the course with having properties, you have to ask yourself, you know, I feel like there's not, like just staying the course and doing nothing isn't a good use of like your capital.
It's certainly not the most effective approach, yeah.
So it's one of those things where you have to make a decision of, you know, whether it's worth it to go through all the struggles to refinance or the struggles to sell. There's hassles with all of that. If you can find someone to buy your whole portfolio, that's a bonus, right?
Yeah.
There are things you can think about when you're in the topic of selling real estate, right? And you guys do it run, for me, you know, there's all those qualitative factors we talked about, lifestyle and, you know, ego and all those pieces that are a part of it. But if you separate that, you could say, you know, every decision is right for each person, but at the end of the day, the numbers don't lie.
Yes.
And if you're getting like a 6% return, don't keep that property. Like, go ahead and refinance that to get it back up to a 12% return.
Yeah,
or
100%.
You know, if you feel that stress and that all that responsibility and all these things aren't worth the headache, then maybe a REIT makes more sense for your lifestyle design.
Yeah.
And for me, that's why I came to the decision I came to. I'm not selling all of my real estate. There's also other extraneous factors, such as I believe the market is slightly overvalued. With interest rates rising and the new mortgage rules that have come into effect in Ontario, I think that we're going to see, not this spring, I think the spring's going to be hot.
I think this spring's going to be crazy.
It's going to be insane for lower, like under $500,000 properties.
It's going to
like
be
400,
stupid.
300, 200. It's going to be really, really nice. But I think long term, we've seen a lot of the appreciation that I think we can handle. And affordability is going to drop. Interest rates, if they rose back up to a point of, say, like 1990s, there wasn't a whole lot of cash flow in real estate. And if you had property management and everything else, you're making nothing. You just made appreciation, which was nothing in the 90s. So that would be a very depressed market. And I think at the end of the day, no matter what my decision was to divest from real estate slightly.
Yeah.
Maybe not fully, but I was going to take some money off the table. So 90% of my net worth wasn't in real estate. I wanted to have that
I completely understand.
diversity. And so I may take these 5 properties, let them accumulate some wealth, and then refi, buy, and do 10. Trade them, sell them off. Who knows?
Yeah.
There's still things I'll do with real estate, but I want to have that feeling of like, you know, even family members that said to me, like, you haven't made any money until you've locked that money in. So that always itched at the back of my head, like, that money isn't real. I don't actually have any wealth at all until I've sold and that money's real and I pay tax on that money. And so that was something like having $1 million cash, tangible, felt like I'd actually made it for real. And I wanted to lock that in. So
I
there's a psychological thing too, and there's a whole bunch of factors that come into play, but I think that for me it was the right decision to sell. Not everything, but a good 2/3 of my portfolio.
Yeah, I think that's a really interesting perspective. I think it's a perspective a lot of people on my channel, if they actually execute on what their dreams are, they're going to find themselves at the same inflection point as you. So everyone that wants to hate on Michael, jump in the comment section and tell him why he's an idiot. Everyone that thinks it's great that he's doing lifestyle design, jump in the comments and tell him about that. And otherwise people can find you at 25andfree.com.
25andfree, 25.
Link in the video description down below. And so that's essentially just your blog where you're discussing both some high level personal finance issues as well as your day-to-day stuff and some tips and tricks, right?
Tips and tricks with real estate, but mostly focused on personal finance and how you can reach early retirement. I'm going to put some content up there for real estate as well.
For sure.
Don't get me wrong, real estate's amazing. You can make a ton of money, but the flip aspect of it, the BRRRR aspect of it, where you renovate it and create value, that's where you make most of your money. The buy and hold, you make less money doing that. So that was kind of where I wanted to share that opinion, that not a lot of people realize that when they buy in cash or something, that's not necessarily a great return on investment.
Absolutely.
Without that leverage piece. So check that out.
Awesome.
Message me on the blog or check me out on Facebook.
He's still the sort of guy that literally just adds anyone that adds him on Facebook, so go ahead and do that. I don't do it anymore. There's just too many people adding me, but
if you send me a message, I will add you.
Actually, that's a great tip. Like, honestly, the number of people that just blind add and don't do anything versus the people that write an essay and
I've been having to like remove some of these people that are like from Bangladesh, and they've been sending me all these messages, and I'm like, why did I add you? Because you had 3 mutual friends. So yes, I will add on Facebook. If you want to check out the videos on Facebook, I have like 200 of them on there.
Yeah.
Of my struggle going through real estate, I made a ton of money, like over like $500,000, right, in a year, which is like, that's like top 0.1%, I'm sure, for my age and all this. So I did really well in real estate. And I came to the decision I came to, and I'm a well-educated person. Matt's a well-educated person, and he knows his stuff, and he's come to the decision he's come to.
Yeah.
To keep his portfolio for now, and I'm sure it changes every day.
It's so situational. It's dynamic, right? It all depends on what you're trying to accomplish from lifestyle. So it's really up to you, and that's the awesome part about financial freedom is that you're in control. It's about having that nexus of control, that nexus of influence. So, anyways, I think this video is going to be more than long enough. I think I have over like an hour that I'm going to have to cut down just for this video. We're going to wrap this up now, but smash that like button if you didn't. Subscribe if you haven't already subscribed. And YouTube wants you to check out the videos down below. Until next time, this is Michael Rosehard, and any last minute tips?
Sell.
Sell. Thanks, guys.